Characteristics of the regular income tax. We have 5 characteristics of the regular income tax. First, general in coverage. Second, a net income tax. Third, an annual tax. Fourth, creditable withholding tax. And fifth, progressive or proportional tax. One of the characteristics of the regular income tax is general in coverage. It is general in coverage because the regular income tax applies to all items of income except those that are subject to final tax, capital gains tax, and special tax regimes. Sa mga previous lessons natin, na-discuss ko na ang general income tax ay ang general rule in income taxation kasi malawak ang kanyang coverage. It covers not only the active income, pero pati na yung mga capital gains na hindi subject sa capital gains tax at yung passive income na hindi subject sa final tax. That's why regular income tax has a general coverage, or the regular income tax is general in coverage. Aside from general in coverage, the regular income tax is also a net income tax. The regular tax is an imposition on residual profits or gains after deductions for expenses and personal exemptions allowable by law. Meaning to say, ang regular tax, ini-impose yan or pinapataw yan dun sa natitirang income after madidak yung allowable deductions at personal exemptions. The residual profits or gains after deductions for expenses and personal exemptions allowable by law pertain to the net income. That's why tinawag siya na net income tax. So ang regular tax, ini-impose yan or pinapataw yan dun sa net income. Next, another characteristic of the regular income tax is that it is an annual income tax. Annual means every year or per year. So, ang ibig sabihin nun, ang regular income tax, applicable siya sa yearly profits or gains. The regular income tax applies on yearly profits or gains. The fourth characteristic of the regular income tax is that it is subject to creditable withholding tax or CWT. Na-discuss ko na to sa previous lessons natin. Ang creditable withholding tax ay tax credits, or this is an advance tax that must be deducted against regular tax due to compute the tax is still due to the government. In other words, ang CWT or creditable withholding tax, ito yung i-deduct natin sa tax due to arrive at the net tax due. Yun yung creditable withholding tax or CWT. Next, the fifth characteristic of the regular income tax is progressive or proportional tax. The National Internal Revenue Code or NIRC imposes a progressive tax on the taxable income of individuals, while it imposes a flat or proportional tax of 30% upon the taxable income of corporations. Pag sinabi nating progressive, habang pataas ng pataas yung income ng individuals, pataas din ng pataas ang kanyang income tax. Pag progressive kasi, ang ibig sabihin nun, pataas ng pataas. Pero, sa corporations, there is a 30% proportional tax rate upon the taxable income of corporations. Hindi siya progressive but rather flat or proportional tax na 30%. That is in accordance with the National Internal Revenue Code. But take note that the revision of the corporate income tax in the second package of the tax reform for acceleration and inclusion law proposes a 25% corporate income tax. Let's proceed to the regular income tax model. The question is, how do we compute the taxable income? The taxable income can be computed by deducting the allowable deductions from the gross income. Ang ibig sabihin nun, gross income less allowable deductions, the result is taxable income. Gross income less allowable deductions is equal to the taxable income. Take note na ang tinutukoy na gross income dito ay inclusions in gross income. Inclusions in gross income pertain to the list of income subject to regular income tax. Ito yung list of income na subject sa regular income tax. So, hindi dapat exclusions from gross income. Kasi pag sinabi natin exclusions from gross income, ito yung list of income na exempt sa regular income tax. Kung exempt na siya sa regular income tax, that means hindi na dapat siya patawan ng regular income tax. So the gross income here should pertain to the inclusions in gross income. Now it's time to explain gross income and allowable deductions. I will first explain gross income. Gross income constitutes all items of income that are neither excluded in gross income nor subjected to final tax or capital gains tax. Lahat ng items of income na hindi excluded sa gross income, na hindi subject sa final tax, na hindi subject sa capital gains tax, ay kasama sa gross income. Hindi kasama sa gross income ang exclusions from gross income kasi pag sinabing exclusions from gross income, they pertain to items of income that are excluded. Therefore, exempt from regular income tax. Kaya hindi siya kasali sa ating gross income. Aside from that, yung mga items of income na subject na sa final tax ay hindi kasama sa gross income. Yung mga items of income din na subject sa capital gains tax ay hindi rin kasali sa gross income. Remember that our income taxation schemes are mutually exclusive. Meaning to say, kung yung items of income ay subject na sa final tax, hindi na dapat siya subject sa regular income tax at capital gains tax. Kung yung items of income naman ay subject sa capital gains tax, hindi na dapat siya subject sa final tax at sa regular tax. Kung yung items of income ay subject na sa regular tax, hindi na dapat siya subject sa final tax at capital gains tax. Allowable deductions are simply called deductions. Allowable deductions are expenses of the conduct of business or exercise of profession. Tignan natin yung definition. Expenses of the conduct of business or exercise of profession. Expenses to for the conduct of business. So pwede nating tawagin ng allowable deductions ay business expenses. Yun lang naman ang ibig sabihin ng allowable deductions, business expenses. Take note that individuals that are not engaged in business cannot claim deductions from gross income. These individuals do not have business, kaya wala silang business expenses. Ang meron lang sila ay personal expenses. At ang personal expenses ay hindi naman kasama sa allowable deductions. That's why individuals that are not engaged in business cannot claim deductions from gross income. Consequently, individuals are classified as follows. 1. Pure compensation income earner. 2. Pure business or professional income earner. And 3. Mixed income earner or an individual earning both compensation and business or professional income. Yung number 1, pure compensation income earner, ang kanyang income lang ay compensation income. Usually, yung pure compensation income earner ay employee. Yung number 2, pure business or professional income earner. Ito naman, ang kanyang income ay nanggagaling sa kanyang business or exercise ng profession. Wala din siyang compensation income. Pero sa number 3, mixed income earner. From the word itself, mix, halo. Meron siyang compensation income at meron siyang business income or professional income. At yan yung classification ng ating individuals for the purposes of regular income taxation. Doon sa ating regular income tax model, wala na tayong personal exemptions. Dati kasi ang regular income tax model ay gross income less allowable deductions and personal exemptions is equal to taxable income. Pero ngayon, wala ng personal exemptions because the personal exemption is repealed effective January 1, 2018 by the Tax Reform for Acceleration and Inclusion Law or the TRAIN Law. Effective January 1, 2018, wala na sa ating regular income tax model ang personal exemption. The TRAIN Law simply exempts 250,000 pesos annual income of the individual income taxpayer from regular income tax. This exemption is embedded in the income tax table for individual taxpayers.